Monday, 2nd. We're in the lead up into the 4th of July holiday. This is also the 250th year anniversary uh, of the United States, and there's a lot of there's a lot of market participants that kind of disappear in the week before and after the 4th of July. It's kind of like Memorial Day or Labor Day, how there's a little bit lower levels of participation. But the one thing that I'd like to the idea that I'd like to just address here is the fact that over this last 2 weeks, since coming out of these previous highs that we had made, coming out of the middle of June, which is essentially the beginning of the brand new September contract. And what I'm going to do is I'm going to put the contract change events up here so you can see them. And so here's a contract change event. And you'll notice that we had this massive gap that we had created. And we essentially filled those gaps. We also completed profit targets to traditional shorts that we were inside of going into last week. You can see where those front runs had completed their profit targets down here. And so you have this very large group of individuals who, coming out of now 3 Mondays ago, if we include today, have a successful hedge. That they have protected themselves going into what they perceive as being potentially a double top type situation, going into a holiday, going into the unknown of a lower level of participation. And in the intraday timeframes, essentially, there's a case to be made here where we have that group of hedgers and maybe even late hedgers, chasing the shorts down here at essentially our profit targets on the run. Hedgers on the run. And what we're looking to confirm here is dollar strength, VIX strength, and bank weakness, because all of our leading indicators have this little bit of room to continue to weaken. Let's go to the dollar first. You'll notice here that the dollar on the longer term time frame completed a profit target. And we had been in it since the beginning of May. So we went all the way through May and all the way through June. Now we're at the end of the second quarter. We have this massive dollar profit target that was hit. If we made another full retracement, which we did in February again, and we had another one in March, could we come all the way halfway back again? I mean, that's the pattern that's been playing out. We can't prove that larger pullback is going on until we break through these 100 882s. But we can also use the break of this traditional short setup to confirm the next leg higher if there's going to be one. Because we're essentially, we're 99% of the way through that larger setup that we were just inside of coming out of the beginning of May. And so you could make a case here that this dollar weakness trade puts a bid behind the negative correlations. What are the negative correlations right now? The deep negative correlations are the S&P, the NASDAQ, the currencies, gold, silver, Bitcoin, and WTI. All of those negative correlations could have the strongest tailwinds if the DXY chart continues to sell off, even if it's just in the intraday, even if it's just revisiting Friday's lows. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.